Good afternoon. Happy Friday, September 8th. Mark Milam here, your mortgage professional. Let's get right to it. Bit of a volatile week as it pertained to mortgage interest rates, depending on the day and time that you called from Tuesday through Friday. Of course, we were off for Monday for Labor Day, but from Tuesday to Friday, depending on the time you called, you could have seen a quarter-point change in interest rate intraday based upon the level of volatility that we witnessed, especially on, I believe it was Wednesday of this past week. I'll flip the screen around here and show you what I'm talking about. So when you look at the past 4 business days right here, you can see we've got this U-shaped pattern that tells us Tuesday and Wednesday we were selling off, rates were deteriorating. Thursday, Friday, we've recovered some of that loss. But I want to call your attention to this day, September the 6th. And if you can see the total trading range, there's a skinny line here along with this fatter line. You can see the total trading range. This represented over 100 basis points of differential in trading range within 1 day's time frame, and it was bouncing around within that range consistently throughout the day. Just a lot of volatility causing lenders to reprice multiple times. We had 3 different reprices from most of our investors. Just a lot of volatility. And what is this centered around? Well, it's centered around hotter than anticipated economic news. Coming in this week, we saw initial weekly jobless claims coming in lower than expected, labor costs coming in hotter than expected. That's really not what the Fed is looking for. The Fed wants to see the economy cooling off. We saw the ISM services come in higher than anticipated, and then some manufacturing numbers came in along the same lines. That caused upward pressure on rates. Additionally, we had corporate bond issuance this week. We're adding more supply of bonds to the market. Mortgages are just long-term bonds, and anytime you increase supply of something, you start to devalue it, and we see interest rates go up in those instances. But we've seen a resilient market coming back here in the latter 2 days, basically making the counter argument that the economy is slowing down. And really, we have 2 camps right now. Both camps have a lot of data to support their side, and they're very differing sides. You've got one side that says, hey, inflation is moderating, which it is. We got the PCE number last week to show us that inflation is continuing to moderate. We've got a softening labor market, not a slow labor market, but a softening labor market, especially as compared to earlier this year, and we're right on track to get inflation beat, and interest rates should be coming down. That's one camp. The other camp is we're not done yet. The Fed is not done yet. We're going to hold interest rates higher for longer thanks to the resilience of the economy. And we do get these periodic reports showing that activity is actually increasing. That gives more fuel to the fire that says, hey, boomerang inflation's a real thing. It happened back in the 70s and 80s. It can happen again. And the Fed will not make the same mistake twice. They are not going to be wrong on inflation twice. They were already wrong with inflation being labeled as transitory. They're not going to do that again. So the camp that's higher for longer probably has a little bit more steam than the camp that says, hey, job almost done. Let's take a look at the Fed Fund futures as we wrap up the talk today. If you look at the Fed Funds futures, the next meeting for the Fed is September the 20th. There is a 93% chance right now that the Fed will not alter the Fed funds rate on September the 20th. They will hold the rate steady where it is right now, which is 5.5%. But if we go to the next meeting, November the 1st is the next Fed meeting after that. You can see this number changes dramatically. We now have a 43% chance that the Fed will hike one more time this year in November, up from 5.5 to 5.75%. It'll be interesting to see how this number evolves over the month of October and what we have remaining here in September. Meanwhile, if I can be of any assistance to you over the weekend, don't hesitate to reach out, mark.milam@highlandmtg.com. Thanks.